Gold is consolidating, silver is consolidating. That gives us the chance to talk about another gold junior explorer that I want to present to you in today's video and next videos. A deep dive of a company. Man, if their plans play out, this could be one of the most exciting stories in the junior producer space. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. So let's start with the metals real quick. Quick overview. As you can see, the topping tail in gold that I've pointed out is working so far. We are consolidating now. I was a little early with my warning, but better early than late in the market. So right now we're missing nothing in gold, and if we look at silver, we see the same thing. Silver is consolidating as well. No reason to be worried about it. Now, if we get a correction in the stock market in combination with this consolidation, then we might see a bigger pullback in the mining stocks. So that would be excellent. I would love that. But other than that, no reason to worry about anything. Now, the reason why gold and silver are consolidating is the dollar. Look at the Dixie. I've been warning you about the Dixie and how crazy all these fake outs are. And look at this, we just got another one. We broke below the support zone. We went a little lower. All the bears are, yeah, the dollar's getting crushed. Woohoo! Whoop! Right back up, and they're all getting the flamethrower to the face right now. And this looks very constructive, what we're seeing here. Well, I gotta say, we're making new highs on the dollar. So if that keeps going, that would obviously support the consolidation in gold and silver, which we like because we will use it as a buying opportunity. And I want to introduce to you a junior producer right now that you've probably never heard of, but that's exactly why you come here to Hot Trades of the Day. Who cares about another analysis of Barrick Mining or Newmont? You want to hear about the stories that nobody's talking about today that could be really interesting tomorrow. Contango Ore is one of these stocks. Now, let's get into the presentation. So let's start with this, housekeeping first. I'm not getting compensated at all by this company. I don't own the stock yet. I'm interested in buying it for the right price, as you will see soon. Second thing, yesterday's video, audio wasn't up to the task. The reason being, I was traveling from Bucharest to Warsaw, and a lot of the viewers here are from the US and Canada, so you probably haven't heard, but Russian drones invaded Polish airspace that night while launching an attack on Western Ukraine. The Polish Air Force shot down several drones and they shut down a bunch of airports. So it was chaos on roller skates everywhere in Europe with flights that were coming to Warsaw. This is the reality that we have to deal with here in Europe. So that's the reason today should be better, the audio, and we're talking about Contango Ore. Two-part video, because as you know, while you still need to do your own research, I do like to deep dive on the juniors and explorers that we'll talk about here. So Contango Ore, here are the highlights. It's a small junior producer, check. I really like junior producers. Why do I like junior producers? I like them because they have income. All right. The problem with the explorers is they'll need to raise money, and that usually leads to diluting the shareholders. Now, if you're a junior producer or a producer, even if you're a small junior producer, you're already bringing in some cash that you can then use to build out the mine, build out new projects without issuing capital raises, diluting the shareholders. So that's what I like. By the way, if you like this content, hit the subscribe button. We talk here about things that you don't hear anywhere else. So junior producer, love it. Second, Contango Ore, their mines are all in the US. Love it. I've told you this before. The main theme of this commodity supercycle is going to be made in the US. right? Well, this also includes Canada and Europe, but it basically, the phrase that we're going to use here for we want to invest in projects, in mines, in companies that are exploring for commodities, producing commodities in the Western countries. Those will be valued the highest, right? Those will be valued the highest in this commodity supercycle. And obviously those are the companies that we want to invest in. They plan a massive production increase in the next 5 to 8 years. So, well, they plan it for the next 5 years. I would caution, add a cushion of 3 years, so that's why I say 5 to 8 years. If this works, if all of this goes right, they will increase their gold production by somewhere between 3 to 4x. And ideally, that increase would then happen with pretty much the peak phase of the gold bull cycle, which means they'll make the most money, right? If you have bigger junior producers, senior producers, they're selling right now a lot of their gold, which is great, brings them cash flow right now. But guess what? You know what's even better? If you can sell a lot of your gold at the peak phase of the cycle. That could be the case, and I stress the word could, right? If things go right, which then leads us to a multi-bagger potential long-term with Contango Ore, not short-term, long-term with Contango Ore, and on top, and you know I love this, we get a big-time joker with a Trump effect that could then trigger a hype in the stock, which we know what happens when stocks get hype. Now, let's get into it. So, Contango Ore, absolutely unknown to the majority of the investors. That's okay. We'll go through the presentation and we will, actually, you know what, let me start with this slide right here. So, we will explore the company from different sides. Let's start with this. It's a market cap fully diluted of around $300 million. I like that, right? It's big enough that institutional investors will take a look at it once good news keep coming and the share price increases, right? We have the big marks, 500 million and then $1 billion, and then over $1 billion things get really interesting for institutional investors if the liquidity is there. So, love that. Big check. High insider ownership, over 20%, you see it here. Love that. Big check mark. 26% institutional investors. Now, with a company, 300 million, some of it is ETFs, obviously, but not that much, right? This is not like a $5 billion company. This usually includes with smaller companies under 500 million, a lot of strategic investors, and only 54% retail. Beautiful, love that, especially insider ownership. Big check mark. So we're doing good right here. Look to the middle left, capital structure. 12.6 million shares outstanding, only about 700,000 warrants. It's a little less actually. That, ladies and gentlemen, is one of the best capital structures you will ever see with junior producers and explorers. That is not even 5% of diluting the current share count if all these warrants get exercised. That's a big plus. So we're right off the gate. We're really cooking with gas with this company when we talk about these type of numbers that most retail investors don't even look at, but they're really important, okay? Here's the problem. I was also looking at a company that was doing exploration work in Africa. Now, I don't like Africa, but it's a freaking continent, right? You can't just put it all in one basket. There are countries that are excellent when it comes to mining. I was looking at it, and they have warrants outstanding that would increase, if they all exercise, the share count by 50%. That is absolutely insane. We don't want any piece of this. So here we got the exact opposite. Super capital structure. Nice. Now, on to the next. Now, here comes the big boy. Okay, and here we go. They have 3 projects which I love, we don't want, or at least I don't like to invest in companies that only have one project, right? Because if that fails, if there are delays, if the explorations are going as planned, the stock is getting killed and we're going to be finished for years. So I want multiple projects. They got 3, super. One of them in production, one of them in production, one of them in development, one of them in exploration. So perfect timeline too. But what I really like is what you see big in the middle. They're all in Alaska. They're all in the US. So Alaska is not my favorite jurisdiction. Now it's going to be the hot jurisdiction, which is a big plus for Contango Ore, right? I personally prefer states like Nevada. Why? Well, because you can work on the projects year round. In Alaska, you kind of can't do that in the winter, right? It's the same problem. While I'll personally prefer to stay away from projects in the northern part of Canada. You can really do exploration only like 6 months out of the year, 8 months out of the year. Not great, right? But there are always exceptions. Alaska is an exception. Why? Because we have the Trump factor, right? You know Trump wants to open up Alaska to mining, and that could send the stocks of companies that are exploring and developing in Alaska through the roof. Massive Trump effect, and we have this here. This is the great thing about Contango Ore. This is really a future story with a good present. That's how you can see it. So I give this a B+, right? And only a B+ because I don't really like Alaska, right? And you will see one of the issues when we talk about the Johnson Tract project, bottom right. It's their main project. It has some infrastructure problems and it's like typical Alaska stuff. But they also have one project already in production, the Manh Choh mine. It's a small project for Contango Ore, but they are in production. They are producing gold. Now, here you see the beautiful state of Alaska. I've never been to Alaska. I really want to go. And you see where the 3 projects are located. Actually, let me move my ugly picture over here. Who needs to see my face? The slide is important. Here we go. So we got the Manh Choh project over here. This is in production, right? We got the second project called Lucky Shot, great name. Lucky Shot mine right here. Johnson Tract project right here. So they're all close by. And this is important. Why? Because right here we have a mill that Contango Ore is using that is run by Kinross, big senior producer. And the Manh Choh mine is a joint venture of Kinross and Contango Ore. So before we get into all the details of the 3 projects in the next video, let's stop here and talk about the 3 projects from a bird's eye perspective. And again, if you like this content, if you're like, wow, I've never seen this before, hit the subscribe button so you don't miss the next video, because the next video will be fire, I can tell you that, when we get into the details and you will understand what the situation is. So we have 3 projects in Alaska, US, top. 1 is in production, excellent. Now, Contango Ore says they'll get around 60,000 ounces of gold equivalent. Important, not pure gold, it's gold, silver, and copper. Now, good for us. Silver's gonna run high as well, so that'll bring in the money. And copper is very, very solid, will probably go up, but obviously it hasn't gone up as dramatically as the gold price. So they say they're gonna get 60,000 ounces of their 30% deal of the joint venture with Kinross. Now, let me switch to this slide right here. We'll get back to all this tomorrow. So you can understand the story that is really the driver behind Contango Ore. All right, so this is the slide that we need to look at. So Contango Ore says this year they're gonna make around 60,000 ounces of gold equivalent from the Manchu mine. Okay, that seems to check out. First half was around 35,000 ounces that they reported, so that should work out. Within the next 2 or 3 years, they plan to bring the second project, Lucky Shot, into production, which then, as you can see here, will increase the production to up to 100,000 ounces of gold equivalent if this works. And then comes the big one. Johnson Tract is the big project, which is supposed to add 100 to 150,000 ounces of gold equivalent to the production, which means it would basically double the production again if we base it on 100,000. Let's always go with the more conservative, more lower end outlines, okay? Which would then bring the total production to 200,000 ounces of gold equivalent in about a time period of 5 to 8 years if this project really goes into production and Lucky Shot gets into production. So that is a massive increase in gold production in the upcoming years. That's what I want to see. I want to see a junior explorer that is increasing their production by a lot. Damn it, my picture again at the wrong side. Oops. There we go. So here we go. Sorry about that. I can't be smart and good looking at the same time. So there you see the 200,000 on the right, and you can see the stepping stones that management says the company will take. Now, we always need to take this with a grain of salt. We know in mining, things A, get more expensive than they're originally planned, and B, take longer than they're originally planned. But this is the structure. Even if we come out at 180,000, for example, in 5 to 8 years, that's still 3x increase in gold equivalent production. I love that. I want to see that, because then we have two main drivers, which we have right here, which means if the gold price goes up, they're going to make more money and they increase production at the same time. That is two turbos that we want behind our investment if we choose to invest in Contango Ore. So that's the part of the story where I'm going to leave it right here. And then tomorrow, we're going to talk about the mines. We're going to talk about the story that makes Contango Ore so interesting. And again, I already told you, besides the massive planned increase in production, the location, the Trump factor with mining and exploration in Alaska, I also like that you see right here that the majority of the increase in production is supposed to come with the Johnson Tract project at the end of the growth phase, which means that they're going to get the highest gold prices, right? If they would jump into production, let's say Q1 next year, from 60,000 to 200,000, I mean, let's forget that the stock would go through the moon, because it would be like 3.5x, 3x in a short time. But then they would sell their gold at around, I don't know where we're going to be in the first quarter next year. I think we're going to be at 4,000 somewhere. So somewhere around 4,000, 4,200. Okay, that's nice, but that gold is gone. But if they sell it in 5 years, in 8 years, towards the end of the gold cycle, the peak phase, when gold is going to be somewhere around 6,000 to 8,000, if you listen to most mainstream banking analysis, if you ask me where we're going to be at 10,000. This company is going to make so much more money. And that is the interesting, that is the interesting kick on this company. It's not going to be the hottest story next year, right? Because Dev Manchu is going to bring in 60,000. That's cute. But it's really about the development of Lucky Shot, and then especially of Johnson Tract. And if they can get that done, then mid to long term, all of a sudden, Contango Ore becomes a super interesting story. But more about that tomorrow in the second part. Hit the subscribe button if you haven't subscribed. Do not miss the second video. And again, do not miss any of these type of videos and information that you usually don't get anywhere else. That's it for today. Talk to you later. Bye-bye.